Well, let's move on then to a mega CNBC TV18 exclusive. Earlier today, we were joined by a veteran of markets, Mr. Ramesh Damani, member of BSE, to get his sense of the market given the current global cues as well as the elections. He advises to buy great companies cheap and says that gaming stocks are expected to do well in the coming years. Let's hear out what he had to tell us.
The two things that I've learned over the last 30 years is be bullish on India and don't be afraid of your own convictions and betting when the opportunity seems right. I think it took me a long time to kind of understand those principles, but you know, it's never too late, as they say. But it's a great thing for young people to understand. You understand that markets are magical, that you have to be patient, that you can compound monies over large periods of time and make a substantial difference to your wealth. And you need to, the underlying tone must be bullish, because this country is giving us such great opportunities. The index has gone from 800 to 36,000 during the last 30 years. So the opportunities to make money, to be a great entrepreneur, to contribute to society has been so enormous. And I think we should not lose the trees for the forest.
Ramesh, what is your investment style or lesson? Do you look for corporates with good governance? Or do you look for the underlying theme that, there is an economy tailwind in a particular sector? What would your mantra be?
It's a mix of all these, Lata, as you would probably imagine, that of course you look for, sectors that are going to do well. We look for corporate governance. But at the end, all great businesses, all great investments boil down to the same thing, that you want to buy things cheap and you want to buy things which are run by people of integrity. A great business bought cheap is probably the best investment advice that I can still give. It has worked like a charm, and you really don't need to do much else. It is not, as Warren Buffett has said, it's not a very high IQ business. It's a business where you just have to kind of think, read, understand, and then place your bets accordingly. It's very clear in India, say in the mid-90s, that IT was going to start doing well, and I think subsequent events have proved it right. In the 90s, for example, you knew economic liberalization was going to be a dramatic change that took place in India. So a lot of themes kind of pre-announce themselves, and you have to have the faith and see where this takes us. There have been disappointments on the way, but that's just a part of the investing game. So to come back to your original question, Lata, all we still look at is just to find great businesses at valuations we understand.
This whole equity cult that we saw last year, so much money coming into mutual funds. I mean, if we had the kind of FI selling 5 or 6 years back, the market would have collapsed. But this market sort of stayed put because of the kind of domestic buying support that we had. Do you think this equity cult is going to be intact even through this volatility?
I hope so, Anuj, and I think it will be. It seems to me, from where I'm sitting, that the Dow finally appears very tired. The leadership has been under pressure. The FANG stocks have been under pressure. As Latos pointed out this morning, the yield curve is getting inverted, which suggests oncoming recession. There's talk of a trade war, which will be very dampening for America. And obviously, there is a general fear that the economy is going to go into a recession. Now, all these benefit us. So the money moves out from developed markets to emerging markets as interest rates rise in America, as the trade war settles. I think we will be better placed. So as long as oil remains at around $60, $70 a barrel, and generally we chug along, I think the market's fear of election uncertainty are perhaps overplaced. I think there's a good chance that the state elections might disappoint the market, but I think the people will vote differently between the state election and the national election due in 2019. And I think the market will overcome those sort of fears. I think the country itself is in a sweet spot in terms of consumption, in terms of growth, in terms of demographics. So I would not be particularly wary of this bull market ending. I would say that buy the dips is a better strategy than sell the rallies.
You spoke about the IT theme, which just pre-announced itself in the 90s or the late 90s and the early 90s, India going into liberalization. That also kind of pre-announced itself. Are there any themes that are pre-announcing themselves now, which you will look for? Quick service restaurants?
That would be a good example of what I've been betting on, because I think as more women start working outside the home, as domestic help becomes less available, as people just want a good environment to eat and not eat at a roadside stand, quick service restaurants will be probably a good place to go. Some of the stocks are still fairly cheaply valued, in a manner of speaking, compared to the potential, not necessarily on earnings basis. So that looks good. A little bit of the alcohol, because human habits don't change. the sin stocks will probably do well. The gaming stocks, I think increasingly this will become a very important gaming market in India in terms of casino. Across Asia is a jewel, right? Starting from Japan, Singapore, Malaysia, Philippines. You have gaming everywhere. So if you want to be a part of the MICE market, you'll almost have to introduce gaming. So, we're fairly optimistic. I think there are a couple of companies with early leadership in that sector. So that'll do well. Among the new sectors, Lata, that we started looking at, particularly after this fall, has been an old theme favorite of mine, PSU stocks, particularly the recently listed railway PSU stocks that have, trading below IPO price and offer fairly good value according to me. So we've looked at both of them. We look at, company that deals in the petrochemical, petro additives business, making chemicals for the chemical, textile, oil drilling industry. And we think packaged foods is going to boom. While we haven't been able to find a packaged food business per se that we like tremendously, we like the companies that make the machinery that allows them to do that. So I think those are some of the new themes that I've been betting on.
Okay, on that note, it's time for a short break. Up next, we'll get chatting about the market technical trends with Ashwini Gujral and Rajat Bose. Stay tuned for that.